Hey, what's going on, guys? Good morning and happy Sunday. Bryce, Russ, good morning, good morning. And yeah, I'm feeling much better today. Much better today. Good morning, Charlie. But all right, guys, we'll jump in. I'll try not to keep you for too long. And I'm also live on YouTube this morning, so hello to the folks on YouTube. But all right, so a few things for starters here. Keep in mind we got a short week, so sadly we have to wait until Tuesday. But on the economic calendar here, a few things this week. So Wednesday you have the Fed minutes. We'll hear from JP and the boys. Thursday, you got the jobless claims, and then aside from that, a few Fed speakers. So a few things going down there. And then NVIDIA has earnings on the 19th. Well, it can't be the 19th that the market is closed. NVIDIA's got earnings at some point this week. Maybe one of you know the exact day. But all right, so with all that being said, if we check out the scoreboard here for the indices, at face value, everything still looks really good. Good looking monthly scores, good looking weekly, good looking 3-day, good looking 2-day, the daily, the 4-hour, the 2-hour, even the hourly. Everything still looks pretty good. So there's no immediate issues there. All right, no big red flags. When the market is as overbought as it is, everything's 3 to 3.5 to 4 ATR above that weekly 21. What you want to do is look for little chinks in the armor. Right? If you wait for the weekly chart to look ugly, it's going to be a little bit too late. So it's your 15-minute, your 30-minute, your hourly charts. They can leave some clues. And then over here on the updated score sheet, so one thing I like to do is look at the top 10. Right, top 10 or 12. And heading into this week, it's an interesting cast of characters. As of Friday's close, according to the Big Three score, these are the best of the best. JP Morgan, Wells Fargo, the healthcare sector, the consumer discretionary sector, the materials sector, the financial sector, TJ Maxx, the industrials, Uber, ASML, O'Reilly, Caterpillar, and Salesforce. So my first question is, if I'm expecting the S&Ps to be strong, the QQQ to be strong, just another strong week for the market, are these typically the names I think are going to lead the way? The bank stocks, some retail stocks, O'Reilly, Caterpillar. For me, the answer is no. If I'm thinking we're going to have another nice week of upside, I want to see the QQQ. I want to see the S&Ps. I want to see the big boys. All right, where's the Microsofts? Where's the NVIDIAs? The Googles, the Amazons, the Teslas. The S&Ps are down here at a 73, which in the grand scheme of things, 73 out of 100, it's a really good score. That 73 out of 100, it is a little bit of a downgrade. You go back a few weeks ago, pretty consistently, the S&Ps are up here at 100, 95, 90. You've got SMCI down here at 61. And the thing about that, I think it was down, 20% on Friday? It didn't even pull back to a daily 21. So from a normal, call it ebbs and flows perspective, that could keep pulling back. Still look like a really good chart. We've got AMD down here to 57. So I think we want to keep a tight leash on those AMD calls this week. And then the big boys, the kings of the castle. Amazon's a 53. Am I going to short that? No. Am I going to bet the ranch on Amazon exploding? Probably not. QQQ downgrades to a 46. Is that the worst score on the board? No. Is that a downgrade from 100 out of 100, 90s, 80s? It is a downgrade. XLK, the tech sector, is a 34. Microsoft is a 24. And then a little bit further down, you got Tesla, -2. My old buddy Google's a -7. And then look what they're doing to our buddy Apple. Apple's a negative 33. So there are a few things kind of shuffling on the board here that I don't think mean, hey, go short the market. But a few things that might suggest the stronger parts of the market, your tech stocks, your semiconductor stocks, they might be a little bit tired. Now, probabilities-wise, the idea of the tech stocks and the semi stocks may be getting a little bit tired up here. That does make a lot of sense. You've got the weekly squeeze that fired long about 12 weeks ago. If you take John's rule of thumb, squeeze fires, you're looking for, anywhere from 8 to 10 bars. This one's been a bit of an overachiever. We got 12 weeks out of it. This was one of the first weeks in a while where we didn't close at a brand new high. All right, now drop down to your daily chart. The point I'm trying to make, though, is when we're up there at those weekly extensions, if everything's going to just keep on going higher, everything has to fire on all cylinders. The weekly, the daily, your 15-minute, the 30-minute, the hourly, everything's got to be locked and loaded. So as far as the daily chart goes, all right, no big problems, no huge red flags. It's a 10 out of 10. The one thing I think you want to take note of here, we got the CPI report on Tuesday. We pull back to a 21. We get the initial rebound. Here's how I look at it. On the way down to your 21, problems develop on your lower time frames. Right? They're not putting a dent in the weekly chart. They're not causing any damage to your daily chart. The 1 hour, the 15, the 5-minute, they get a little bit tossed around. Now, in a bull market, I think to an extent, you expect it to bounce initially. In a bull market, 10 out of 10, a pullback to a 21, I think the initial rebound, not all that uncommon. My whole thing is, can that rebound fix all the little issues that might have developed on the 5-minute, on the 15, the 30-minute, the hourly? When that rebound fixes all the little problems, very much like it did back here, she can keep on pumping. Right. Path of least resistance is to the upside. When they can't quite address all the issues, just something to pay attention to. Now, the other thing here, I'll zoom in a little bit. Right. You get the flush. You get the initial rebound. They're trying to take it back towards the highs on declining momentum. We don't have a full gas tank. We've got a gas tank that's getting lower and lower by the day. That kind of points towards that bounce. Might not be all that sustainable. Back here, you pull back. Momentum turns higher, and you get a little push going. Right, now drop down to your 4 hour. And you can see that negative divergence. Momentum peaked all the way back here. It puts in a lower high right here. But as far as last week, you get the flush. They get the bounce going. They're trying to take it back towards the highs on declining momentum. Did that bounce from Tuesday into Thursday fix all the problems here on the 4 hour? No, it did not. Structure is good, but they never get momentum back above zero. They did it back here, and the push continued. Okay, now drop down to the 1 hour time frame. Did that bounce from Tuesday into Thursday? Leave the hourly chart in perfect standing. All right, we're locked and loaded with momentum. We got perfect structure. And with the flush into Friday's close, it does feel a little bit like the Bulls dropped the ball. They try getting that momentum bounce. Right, you get a little cross back above zero, and right back down she goes. They never permanently fixed the momentum problem. And now what about the structure? Well, they never got the 21 back above the 50. So they never fixed all the issues. And now heading into Tuesday, we've got what I think is a pretty sketchy looking hourly squeeze. So in the event the squeeze breaks short, That can take you back down towards 425-ish. That could take you down towards your hourly 200. I think the bigger question is if that's the path here for the Qs, they are going to go a little bit lower. Can the rest of the market buck the trend? All right, while the QQQ looks a little sketchy here, if we flip over to, say, the IWM, that looks pretty promising. It's got a perfect daily squeeze. It has a beautiful, a gorgeous 2-day squeeze. And then don't forget, you got that big monthly squeeze setting up with those slingshot signals. IWM looking good. You got all those names at the top of the list here. JP Morgan, the financials, the healthcare. So that's kind of the question. If the Qs do go lower this week, and I'll show you a few more things that point towards, they might. They just might. Can the small caps, can names like Bank of America, quote unquote, buck the trend and continue to outperform to the upside? In my experience, that's a pretty tough game to play. All right, I'm going to buy Bank of America. I'm going to buy some XLE. I'm going to go buy some O'Reilly Automotive. And I'm going to try to pull some cash out of these while Amazon, Microsoft, NVIDIA, Google, they're all getting spent. Can it work? Anything can work. As far as probabilities, is that a big money trade? For me, it's not. So for me, the path this week is just day trading. I'm going to focus on 15-minute, 30-minute hourly squeezes. I'm going to watch them in the S&Ps. I'm going to watch them in the Qs with the open-mindedness to maybe playing them short. If I've even got an inkling that the Qs might want to go lower, I do like to pump the brakes on getting swing long. Now, we can always find a good setup. O'Reilly's one. IWM is another. You got names out there like Airbnb. Very nice daily squeeze. Again, Bank of America. As a general statement, every week you can find something that fits the bill. Good structure, squeezes, buy signals, all that good stuff. Without the big boys, or even worse, if the big boys are going lower, it's a little tougher for these things to go higher. So I think the easy answer this week, you got the Fed coming up, big earnings, all these little potential issues, just day trade it. On an intraday basis, find something like the QQQ. Right, drill down to your hourly squeeze. It's going to be a little faster than a weekly squeeze or a daily squeeze, but the principles are the same. Momentum leans bearish. The structure leans bearish. The big three score leans bearish. You've got sell signals on your lower time frames. You short that under your 21. You look for a flush into your target. Then you're going to bed with your peace of mind fully intact. So a few more charts here. If we look at our old buddy, the HYG, which I don't think we've looked at together in quite a while, but the typical theme here is if you're looking for strong S&P, strong QQQ, you tend to want to have strength in your HYG. And this one's a little bit less than desirable. You got a crap load of squeezes. And since January, they haven't been able to get momentum back above zero. 21 about to break under the 50. The 8's already under the 21. If that does break short, not a guarantee the market's going lower, but it ain't going to help it go higher. Then you've got the old dollar, the almighty buck. And in the short term, this looks pretty solid. 8 out of 10, not too shabby. We've got a daily squeeze setting up. If that goes higher, not a guarantee the market goes lower. But again, it's not going to help it. Not going to help it go higher. Right, and then I think a problem all on its own is Apple. Not a very good looking chart. Now, for what it's worth, They can quickly start to patch up some of the holes here if they can get it back above that daily 200. So Operation Save Apple is to get that thing back above that 200 SMA. Otherwise, momentum broke back here. You get that little post-earnings pump going. 21 never got back above the 50. Momentum never got back above 0. That little rally after earnings doesn't fix anything. And now here you are taking out your 200. We are riddled with sell signals. And then you've got this bad boy on the 3-day time frame. Big 3-day squeeze, big divergence. Price goes down. Momentum breaks 0. You get a little rally going. You never get the positive cross. I think a decent chance that might try to break short. They can save it from doing that if they can get it back above that 200 SMA. So Apple not looking all that hot. And then aside from that, guys, if we jump over to the S&Ps, I'd say things are a little cleaner than the QQQ, but there are some of the same issues. Pull back to a 21. We're getting that initial rebound. They're trying to take it back to the previous highs on declining momentum. They can do that, but sustainability-wise, not that easy. If we drop to the 1 hour, I think one potential trade this week, and if we can time it, it could offer a really good risk reward. If momentum goes back below 0 and the 21 EMA crosses back below the 50, I think we can short this right back into the lows. So if we can find a spot here to put on that short anywhere near 5K, I think that could offer a really good risk reward. But the theme this week has to be, did the bounce from last Tuesday fix all the little issues? If they lose momentum, 21 breaks under the 50, the answer shall be no. And then a few more squeezes here. As far as tech goes, you got Microsoft. Now, I think at first glance, a brand new daily squeeze in Microsoft, a lot of us are probably thinking you want to buy that. And that might be the outcome. The problem for now, there's nothing telling us to buy it. From the daily chart all the way down to the 1 minute, we've got a setup. We don't have anything in the form of a trigger for a push higher. You've got daily momentum breaking under 0. Not usually a recipe for a breakout of the highs. And then look at all your sell signals. 2 hour, 1 hour, 15 minute, 5 minute, 1 hour squeeze, 30-minute squeeze. So I know we were talking about this one on Thursday and Friday. That doesn't fit the template. If we buy calls or we do a debit spread or we get long here in any fashion, what are we looking for very quickly? We're looking for a move just like that. Daily squeeze at the 21, and off she goes. A little weekend project for all of you. Go back to Microsoft back here, right? And on that candle, go look at your 5 minute, your 15 minute, the 30, the 1 hour, the 2 hour. And I can promise you back here, before and during that huge, beautiful push, the lower time frames back there looked nothing like they look right now. You didn't have these 5 minute sell signals. You didn't have a 1 hour and a 2 hour sell signal. You had the complete opposite. Point being, that could turn to a nice trade, but I don't think you got to be the first girl or guy to buy Microsoft. Wait for a trigger. No trigger, no trade. All right, and then you got the semiconductors here. Home of the NVIDIAs, the AMDs, the SMCIs, all your favorites. So for SMH, and I can't stress enough, right? Overbought is not a good reason to get short. And overbought is not a reason for the market having to pull back. It's just context. I got to go into this week knowing my S&Ps, my QQQ, the Dow, the semiconductors, NVIDIAs, everything's pretty damn stretched. Do I blindly short it? No. But I'm also at a point where I'm not going to blindly get long. Where I think you're going to get your clarity. 1 hour, 30 minute, 15 minute. So you got this big squeeze here. And again, guys, it's that same pattern. Everything pukes on Tuesday. You get that big initial rebound. They're trying to take it back towards those highs. They've got no gas in the tank. They never get that positive cross. So this weekend, a lot of different charts. You have that same pattern. Big pullback on Tuesday. Big bounce into the end of the week. Nothing really fully locked and loaded. Little chinks in the armor to pay attention to. And then for NVIDIA. Okay, so earnings is what? 21st. Okay, that makes more sense. So earnings on Wednesday. And that is going to be an interesting one. I mean, again, look at it this way. NVIDIA trades almost $100 above weekly 3 ATR. Right, put that in its proper context. NVIDIA can gap down $100 after earnings. The weekly chart is still nowhere near the buy zone. We are $200 above the buy zone. So am I going to short NVIDIA into earnings? No. Am I going to buy calls before earnings? No. What I would say is there's room for lower. And this could continue to be one of the better looking charts in the entire market. I think if we're lucky enough to wake up to a nice little pullback, a nice gap down, at some point we're probably trying to buy that. So have the popcorn ready for Wednesday. And then I do want to spend a few minutes here on SMTI. All right, so down 20% on Friday. The big three score is still 10 out of 10. Nothing changed, right? Structure is perfect. Momentum is perfect. If you bought your calls at the highs on Friday, the 20% pullback definitely sucks. So the only thing I got to say here is, I think there does become a point where you're either playing with your profits, meaning you catch a 20% gap down and you're still profitable. There becomes a point where I think you're playing with profits or you're just going to simply day trade it. At the highs last week, this trades $500 above weekly 3 ATR. Like, again, put it in its proper context of how crazy that move was. Pulls back 20%. The weekly chart is still very overbought. Right? You are still 100% above the weekly 21 EMA. It would take a 50% pullback to be back at the weekly buy zone. So it does feel like in some of these stocks, it'll never pull back. Right? And you keep buying calls with size, you keep sizing in, and then the inevitable happens. You get a little gust of wind and you're down 15, 20%. Is it still bullish? It's still super bullish. If it pulls back another $150, do I think you want to buy that dip? Definitely. I think a good rule of thumb, you're up there at I mean, where did this even get? I think a good rule of thumb, when you are 5 to 10 average true range moves above your weekly 21, day trade it. Then the big gap down can't hurt you. So figured I mentioned that. And then AMD. So AMD is a good example, guys, of good setups do nothing for you. if you don't have the wind at your back. Right, you can look at AMD, you can look at Microsoft, DraftKings, Airbnb, Datadog. A lot of good-looking setups out there. When the S&P start pulling back like they did on Friday, when the QQQ starts pulling back like it did on Friday, the best case scenario, more often than not, is that these good-looking squeezes just chop. They might not get demolished, right? It might not turn the corner and fire the squeeze short. But a lot of times, if the indices aren't leading the way higher, it all kind of looks like this. Wednesday morning, here comes the big breakout, and not so fast. Thursday morning, here comes the big breakout, right back down. Friday morning, here comes the big breakout, right back down. It's more frustration than anything. So I'm going to keep a really tight leash around AMD this week, especially considering we have the Friday expiration. Meaning for that trade to pay us nicely, we've got to be rolling into Wednesday, Thursday, really taking out that 180 high. Then I think we got to ask ourselves, unless NVIDIA is making a huge pump into earnings, what are the odds of the semi-stocks breaking out before the biggest earning announcement for the sector? I think a little bit slim. So it's still a good setup, right? 8 out of 10. I don't love the fact momentum turns lower. As a result, we're losing our slingshot signal. I don't love the fact we don't have any lower time frame buy signals. For the most part, things are neutral. The one thing I can say with a good degree of confidence heading into this week, I think it's going to make a nice move. Thing we got to figure out is who's going to get paid, bulls or the bears. But I say that because of all the squeezes here. 30, 15, 1 hour, 2 hour, 4 hour daily chart. It is a lot of energy being built up. I'd be very surprised if we go into the end of this coming week and they haven't, to an extent, released all that energy. So we'll keep a very close eye on that one. But again, my plan this week, lower time frame squeezes, with a major focus on the S&Ps and the QQQ, as that will kind of capture the spirit of it all. So the first trade for Tuesday might be looking for a short here. We got to get a good spot, though. But y'all know the drill. Short it under a 21. Try to catch a flush into that target. Rinse and repeat. Well, all right, y'all, that's what I got for you. Very strong market, very overbought market. If you're looking at your monthly charts, your weekly charts, your daily charts, even the 4 hour and the 2 hour, you're probably not going to see too many issues heading into this week. One thing we are seeing is, first and foremost, a bit of a change here in the hierarchy. No longer do SMCI and NVIDIA and the S&Ps and the QQQ own the top of the list. It's a different cast of characters. Going into Tuesday, we're banking on O'Reilly, Caterpillar, and Uber to keep the party going. So I think a few things to take note of there. Mainly the QQQ all the way down here at a measly 46. And then our old friend Apple is negative 33. So we got that going on. We got the Fed coming out with the Fed minutes. We've got big earnings. And then from a lot of different angles, a lot of different time frames, they tried taking the market higher after that pullback on declining momentum. If we're back in a big weekly squeeze, everything's trading on top of their weekly 21, then yeah, these little problems, they might not matter. It's just when the weekly squeeze fired long 12 weeks ago, when we haven't touched the weekly 21 EMA in 4 months, you do want to look out for these little issues under the surface. We're at a point in time where there's a greater probability that sometime soon price is going to meet back up with that 21 EMA. than we are of seeing another huge push. And remember, that move back to a 21, that can take place in two ways. One, we could just pull right back to it. Or option two is the market just kind of trades sideways long enough for that 21 EMA to come up there and link back up with the price. At that point, you're no longer overbought, and everybody can live happily ever after. So I'm not getting bearish. I don't think the top is in for the year. I think a little pullback here in the leading names would be a beautiful thing. So day trade it this week. Sharpen up your day trading sword with those 15-minute, 30-minute hourly squeezes. And remember, the key there is just that multi-time frame alignment. So if we kind of pretend that the market opens right here, right now. All right, if I'm going to try to get a good sense of, can this 1 hour squeeze break short? It has a little bit to do with the hourly chart itself, and then a lot more to do with my lower time frames. The 1 hour chart might look like the best short ever. If I've got a 15-minute and a 5-minute buy signal, right, things aren't quite lining up. So I would drop down, then I would check the 30. Yeah, the 30 is just okay, right? Not a great long, not a great short. So I'd like to see that get a little bit worse. I go down, check the 15. The 15-minute being a -8. That supports the idea of the hourly squeeze breaking short. If my 15-minute was a +8, well, then it doesn't quite support the idea. Drop down to the 5. My 5-minute is a -6. Little bit of alignment there. But all right, folks, any questions, anything you want to take a look at? I am here for it. But just my personal opinion, I don't think the scan results matter too much this week. I don't think me at least, I'm not looking for new swing trades. A little bit more of a day trade focus. But if I were to look for a new swing trade, I'm not going to force the issue in Google. I'm not going to force the issue in a Microsoft or an Apple. I'd have to look up here. Uber, ASML, Netflix, Nvidia, Caterpillar, O'Reilly, the bank stocks, the healthcare stocks. So we could look at a few of those since we're in town. Bank stocks, right? Goldman's got a big nested squeeze. A nested squeeze and a slingshot squeeze. All different variations of the old squeeze. But I have nothing telling me to buy it right here, right now. I don't have a daily buy signal. I don't have a 4 hour. I don't got a 2 hour or a 1 hour or a 30 or a 15. The only lower time frame signal I have is a 5-minute sell signal. That doesn't quite fit the template for a quick push in the 400. Could change on Tuesday morning. If it does, then I think you've got a trade. Wells Fargo. This one's got a 2-day squeeze. And a very nice one. Really nice 2-day squeeze. You've got the slingshot signals in Bank of America. And this one's got some pretty good alignment. 4 hour, 2 hour, 1 hour, 30-minute buy signals. Again, my question is, if Apple's going down, if the QQQ is going lower, can the financials buck the trend? It puts the S&Ps in a position where, here's the S&Ps. And then you've got the tech stocks, the semis, the Nvidias, the Apples, the Microsofts. They're all trying to pull it lower. And then maybe on the other end, you've got Caterpillar, the healthcare stocks, the bank stocks, and they're trying to pull it higher. The end result for the S&Ps is usually just some ugly back and forth chop. Let's go see healthcare. Healthcare. So Johnson & Johnson's one name that comes to mind. And we are absolutely not going to buy that. Hell no. UNH. We can do better. 21 under the 50, big three score a 3 out of 10. I know we can do better. Lily Bell. I think you can day trade Lily. I don't want to hold it overnight, that overbought. Doesn't mean it pulls back, just the game plan I work. Airbnb. Right, good looking squeeze. Tractor Supply. Very nice squeeze, and TJ Maxx. Those are the best of the best heading into this week. Now, historically, just for what it's worth, historically, on weeks where these are your strongest names, and I'm just assuming that's going to be the case this week, but on weeks where that's the theme, you don't tend to have the market blowing up to the upside. Not always a recipe for a really strong QQQ, a really strong SPX. Food for thought. Day trade it. But all right, peeps, I'll see what you got for questions here. And let me get the big three board up. And we'll get a clean one going for you. Create watch list. Sunday prep. All right, hit me with your best shot. Sunday prep. Yeah, Mike, I'm more than happy to jump on the mic tomorrow morning. I don't think we can do it in essentials. I think simpler is closed. Closed for business. But I'm more than happy to jump on at our usual Monday morning time, which is what, 7:45 Central, 8:45 a.m. Eastern. If you'll be there, I'll be there. I get a little bit lonely. Defi, what am I looking for with regards to open interest on strikes to take? So really good question. To be completely honest, I don't really tend to look too much at open interest. And I'm not saying that's the right approach. That's just always been my thing. I don't look too much at open interest. I don't look too much at the volume on the options. I think one of the reasons might be by default just the things that I trade. QQQ calls, SPX calls, the Googles, the NVIDIAs. There tends to be a lot of open interest is a general statement on things like that. Now, say it's a name like an Airbnb. Not quite a big dog, not really a market-leading name. So a little bit smaller, we'll call it. But you're just seeing abnormal open interest at 165-ish. I think things like that can be helpful. It's not a huge ocean like an Amazon. And that big open interest on one strike could be an indication that the powers that be might want it up there. Good morning, T. Can we take a look at Amazon? Absolutely. Okay, so the scoreboard says our old pal Amazon is a 53. Does it lean bullish? It does. Right, it's not a John Deere. It's not a Roku, a Johnson & Johnson, or a Starbucks. Those are things you look to short for a swing trade. However, in terms of the rankings here, it's far from the best of the best. Few things are in the 90s. A lot of things are in the 70s. So for the old Zon here, As always, I'm a little bit lost without a bigger time frame squeeze. I think when you can find it, taking it from there is just a lot more straightforward. What I would say, though, is if they keep hanging out where they are, about one average true range move from that 21 EMA, there's a pretty decent chance you're going to get a brand new daily squeeze. And then from there, we're playing our favorite game. Are we above that 21 EMA with a bunch of buy signals? If we are, we're going to buy it looking for a push towards 180. Are we under the 21 with a bunch of sell signals? If we are, if you're a brave soul, you might try to short it down to a daily 50. So until we get a daily squeeze, we need an equalizer here. We got to find a middleman. And your middleman's probably going to be that 4-hour squeeze. In the absence of the daily squeeze, we can rock with the 4-hour squeeze. But you want to play that same game. Right? Am I above the 4-hour 21 with a bunch of buy signals? No. Everything is neutral. That makes it a little tricky to call for a big push higher. At the same time, we're not under it with a bunch of sell signals. So I think watch out 4-hour squeeze, and then, then you look for clarity from the signals. Playing the over-under game with that 4-hour 21. On DH, did the indicator show any sell signals on SMCI? That's a good question. Let's check it out. So the 4-hour chart is still perfect. That's like the funny thing about it. It's been so strong, so bullish. It's going to take a lot more than a 20% dumper to get some bigger time frame sell signals. Nothing on the 2-hour because that pullback just takes you back to a 2-hour 21. The 1-hour is still neutral, right? 20% pullback takes you to that's crazy. 20% pullback takes you to the hourly 50. But if we're looking more so towards the top end here, before all the carnage, let's see. You had the 5-minute go from bullish to neutral, but you're not getting a sell signal till down here. So the earliest sell signal on the big three would have been the 1-minute sell signals back here. So in the grand scheme of it all, I can't even see it. Where is it? Let's go back and do it this way. There we go. So we are getting the 1-minute sell signals right here. So you're getting the earliest heads up for a short at 970-ish. Again, a big part of that is just because things have been so strong. It takes a really big dump to trigger the sell signals. Cosmo, an NVIDIA Lotto put for Wednesday. I think the risk reward makes sense. And I'm not usually going to be a big fan of picking on the biggest guy on the jail yard. But I do think if for a cheap little earnings trade, risk reward wise, I've got to think there's a lot more room for lower in the short term than there is for another $200 higher. Now, after earnings, NVIDIA might say, hey, hold my beer, and we're waking up to NVIDIA at $1,000. But for a scratch ticket kind of trade, I do think the short side's a little bit more interesting. Shorting the hype of it all. Yeah, Cosmo, I mean, even just from Apple's weighting alone, Apple makes up a pretty good chunk of the S&Ps. It makes up a bigger chunk of the QQQ. Can the market trend higher if Apple's getting spanked? It can. Probabilities-wise, is that a great... do I want to bet the ranch on that idea? No, I don't. If-then statements. If Apple goes down, then it's certainly easy for the QQQ to go down. If the QQQ goes down, then that's probably going to put some pressure on the S&Ps. All those little things. And yeah, I'll jump over here to YouTube in a second. But yeah, Charlie, that's a big question this week. Are there things in the market that look what we would consider to be perfect? There are a handful of things, IWM being one of them. The question we got to figure out is, one, does tech continue to go a bit lower? Do the semis continue to go a bit lower? And if that is the outcome, can the IWM kind of buck that trend? Looking at the scan results here, here's a few names of perfect daily squeezes. Zscaler, Visa, Lowe's, INTU, O'Reilly, Tractor Supply, Blackstone, IWM, Airbnb, TYL, SMPS, STLD, Okta, Dow Chemical, LYB, Suncor. And that's just this one scan. If we scan for the slingshot signal, there's probably going to be a few more. Big three squeeze, slingshot. Home Depot, Bank of America, Goldman, Melly, ROP, HLT. So across two different scans, there's 70 to 80 names that on their own have the qualities of a stock that can go higher. They've got good structure. In some cases, they've got momentum. They've got buy signals. They're everything we're looking for. And those trades tend to work so well when the S&Ps and the QQQ grab you by the hand and say, hey, let's go for it. I'm going to take it to the promised land. And then they tend to be a total pain in the ass when the indices are doing the opposite. And I think we're already seeing that in our AMD trade. There's been times where we've had the slingshot signal, bunch of buy signals, like everything just, here we go. We can't get that breakout above that 180. Now, that'd be a little bit odd that we're not getting that breakout on that push if the S&Ps, if the QQQ, if the SMH were still pumping higher and higher. That wasn't really the case this week. When we bounced after Tuesday, AMD bounced. When we pulled back a bit into Friday's close, AMD pulled back a bit into Friday's close. The action in the indices will impact some stocks more than others, but that'll be the $1 million question for this week. So with that being said, say you find a Bank of America. It grades out really well. It's high in the rankings. You don't have to swing trade it. If Bank of America is going to go to $36 this week, along the way from 33, there's probably going to be a handful of good-looking 15-minute, 30-minute, maybe a few hourly squeezes. My preference, of course, is buy it back here. And then the morning I wake up and we're up here, I'll take it off. I think you eliminate a lot of the risk this week. What if the QQQ pukes? What if everything goes lower with it? By shifting the focus from a swing trade to a bit more of a day trade. Tuesday morning, everything opens up fine. You got this beautiful 4-hour squeeze. Take it to lunch. You wine it and you dine it. You drop it off at the bus station when you're done. Wake up the next morning. If you caught that push, now you get some profits to your name. Okay, Wednesday morning, Bank of America's got a 15-minute squeeze. I can take some of those profits, open a trade in the 15-minute squeeze. And if this week Bank of America is just the king of the hill, non-stop upside, good chance to walk away with a few nice trades. So that'd be my best advice. Work on your day trading skills this week. If you want to get long, do it in the things that grade out really well. IWM might be a great candidate. The beauty of that is if I get long IWM on Tuesday, and I'm doing that on a 15-minute squeeze signal, for better or worse, by the end of the day, I should be out of IWM. Meaning if Wednesday morning, QQQ pulls everything lower and the IWM gaps down to 195, I shouldn't be caught up in that. There might be a lot to be said for doing the same thing in AMD. Take off our swing position, get back some of that cash, and then, hey, any point this week, if AMD's got a perfect 1 hour squeeze, buy signals, all the fixins, we can buy some Friday calls, day trade it, sleep a little bit better. So that'd be my best advice this week is a general statement. Do that in the top names. Buying something like a Microsoft in a 30-minute squeeze, all these issues, all these sell signals, might be a little bit harder. A Bank of America or an Uber, a JP Morgan might be a little bit easier. All right, check if you got any questions here on the YouTubes. Srini, any changes to the Big Three squeeze? The last update was, I want to say, what month is it? I think the last update was in early January. Nothing's changed since the last update. Good morning, Pride and Envy, GLD, my arch nemesis. My arch nemesis gold. I'll be completely honest. I've got a negative bias towards gold, and that might really just be a me problem. But I rarely have good things to say about it. Every time I do, she just disappoints me. So gold usually gets the best of me. Energy. So yeah, energy is an interesting little sector. Every week for the last handful of weeks, those XLE names keep coming up in the bull scans. Valero, Fang, MPC, and a few more. My biggest gripe about energy has been energy itself. You got all these good-looking names popping up in the scans. Meanwhile, XLE went about 15 weeks in a row, closing under the weekly 21. However, on Friday, you finally get a little bit of a pulse here. Back above the weekly 50, back above that weekly 21. If they can keep pushing, they might try to slingshot this squeeze. All right, down goes price, down goes momentum. They got it pretty close here, but the bears kind of dropped the ball. Never quite got that squeeze to break short, and back up she goes. And yeah, now you got a daily buy signal. So I'd say that's the best that XLE's looked in 15 weeks. You're back above your weekly 21, and you've got a daily buy signal. A step in the right direction. And you've got a 2-day squeeze here. Momentum back above 0. You've got a 3-day squeeze. Almost getting that momentum cross. And then I believe you got a big old monthly squeeze. You've had this good-looking monthly squeeze for a while. And this continues to say it wants to go towards $100. The problem has been everything inside of it. You had a crappy weekly, you had a crappy daily. If they can clean up all those lower time frames, and they're doing a pretty good job here, it might take a while, but at some point they might try to get that squeeze going towards that big 100. So let's see a few of these. Let me see. Fang. Yeah, Fang's been a total beast. MPC's been a bit beastly. ExxonMobil. Getting better. Valero. Definitely getting better. How about Oxy? I wouldn't say Oxy's my favorite. But yeah, I think energy fits into the same category of the small caps, the names on the score sheet. Can they take the baton this week? The baton from QQQ. All right, what else we got here? Ed, good question. So I'm trying to figure out a way we can just have this automated. As far as getting the total score, what I would like to do is just have it on the watch list. You know, have a dedicated column for that total score. Up to this point, I haven't quite figured that out. So for now, I got to do it manually. And the way I do it is just, money makers. So I'll come in here, I'll just copy all the names. All right, I'll dump them all into the spreadsheet. And then I'll add the column here for total score. And then total score is just giving me the sum of all the other columns. So it only takes about 5 or 10 minutes tops. But for efficiency's sake, I'm trying to figure out a way we can get that all automated. And do I have a class on the indicators on the scoreboard? Yeah, so let me grab the link for you there. And let me see, Big 3 system. Yeah, so I'll put the link for that in the chat there. Hey, Colleen, did I develop my main watch list of the green, yellow, and red arrows? Yeah, Colleen, I've put all this together myself. This has all been my passion project. So I kind of just looked at some coding of basic indicators and just kind of reverse engineered and taught myself from there. That's my baby. It's my baby. All right, Mastery folks, see if you got any more questions over here. Yeah, Nancy, that's the guy you got to talk to. That's the guy you got to talk to. He could probably do it in 2.5 minutes from his bed. Yeah, Mike L. I think another good reason to say, hey, I'm gonna day trade it this week. Monday morning, being long feels like the best idea in the world. Tuesday morning, we get that CPI report, and it's just a big dump. If you wake up Tuesday morning with a fresh slate, a little bit more fun that way. If there's such thing as an aggressiveness scale and call it a swing trade scale, the aggressive swing trading, I think, really starts, back here. You're really getting hot and heavy back there at that 21 EMA on the weekly. And the further and the further and the further we get, from a swing trade perspective, it's a little bit more about profit preservation. I'm going to decrease position size. I'm going to be a bit more open-minded to day trading. That way, if we wake up next week and boom, in one foul swoop, there's your pullback to a weekly 21. I've done it before. I'm sure a lot of you have done it before. The party starts back here. We're making money. We're making money. You wake up every day. You buy calls. You know, you're planning on being featured in the next Market Wizards book. And then you get the pullback, and all the profits are just gonzo. So yeah, I think this week with the Fed minutes and all the happenings this week, pumping the brakes a bit on the swing trades, I think makes a little bit of sense. And Nancy, the risk reward labels, I'm hoping we can get those out sometime this week. Those have all been tightened up, so I assume the whole team will be in office this week. And if so, we should be able to get that pushed. All right, guys, a few more questions here, then we will call it a Sunday. Where can I learn more about my A+ setup? All right, let me go grab a video for you. But hey, for those of you watching on YouTube, if you're not already in the trading room here at Simpler, we're doing a 60-day trial for $1. I'll find the link for that. But if you got a buck to spare, you can access the Centrals room. I'm in there 4 times per week. You got the man himself, John Carter. He's in there a few times per week. Henry, Sam, my guy Cody, the whole gang. But all right, so as far as where can you learn more about the A+ setup, I would direct you to this webinar right here. And then let me go find the link for the that $1 trial. All right, there's that. And yeah, my pleasure. My pleasure. Thanks for coming through this morning, everybody. Much appreciated on a Monday. Mike, I'll put these in this room as well. Let me go grab that link for you. And Mastery members, my assumption is you're all in the Essentials room. If that assumption is wrong, I'll put that link there as well. But all right, folks, we'll call it a Sunday there. Good stuff. Good conversation amongst friends. Always a good time. Mastery members, we can jump on tomorrow morning at 7:45 a.m. Central. And of course, the markets aren't open, but the futures might be. I don't know. Futures might be for a little bit. We'll see. But we can spend some time together tomorrow morning, talking indicators, talking whatever y'all want to talk. And then for the good people on YouTube, we'll have our Wednesday morning stream. And then maybe I'll try to get... actually, you know what? I think we're doing a live stream on Friday as well. So I'll keep you posted about that. But again, thank you for your time. Much appreciated. And I will talk to y'all soon. Enjoy the rest of your long 3-day weekend. Adios.